Good morning, everyone. Happy Monday. Welcome to the London session on TopstepTV. My name is Deeyana Angelo. If you're here for the first time, I've been trading futures for almost 12 years now, and I've been actually trading in general for nearly 17. Wow, right? Now, we're going to have a look at what the markets are going to bring us today. I'm probably going to be focusing on crude oil this morning. Surprise, surprise, crude oil trader focusing on crude oil, right? But we're going to see what sort of movement can we have this morning, because I reckon we're probably going to go into some recovery. Last week was a riot, right? So if I go to the weekly chart, let's expand this a little bit. I mean, look at this nice candle. Very good to see crude oil is actually waking up. And somebody seems to have injected a shot of liquidity there. So we're going to start focusing on crude oil again. All right, some of the levels that I'm watching this morning is first and foremost the round number of 69, but then also value area low from Friday's London, which is kind of around 69.16. So that whole area 69 to 16 remains sort of a line in the sand of whether we're going to get up there, accept value and keep going higher into recovery, or if we're going to fail again, right? So big weekly candle, and that always opens up a possibility for a bit of a correction, right? I did look at gold. If you were on my YouTube channel last night, I posted a weekly strategy, and gold is just very messy to me. And I will show you why. So let's just quickly change to gold here. If we look at it from the weekly chart point of view, it's spiky, it looks like a bull flag, but you know, right now it's like selling, buying, selling, buying, selling. Like, what are you doing, right? So to me, I don't want to be involved in that. It is a balance though, so it's definitely a balance. Looking at the volume profile, there's a lot of people who are trading sort of around 25, 44, 5. And this whole area is one big volume node, aka distribution, some kind of a potential supply. And why do I say potential supply? Because whenever something goes up, and up, then starts to distribute and then builds a ton of volume in that area, it can open up the possibility for another sell-off. Now, typically gold has this seasonal thing that I've been seeing year after year, where in December, it tends to put in either a low or a high for the year, and then January sort of tends to reverse that. But, you know, we're a little bit of ways off from the end of the year, and we have elections. So at this point, I mean, I just don't want to be involved in this unless we're at the edges of the ranges. So 2502, you know, that could be an area to look out for. Obviously, round numbers, 2,500. Everything that I say is a zone, right? It's never, you know, oh, 2,502. Well, let's just look at that. No, it's a zone usually of about 30 to 50 ticks. Somewhere where you're deciding, okay, I want to be a buyer there. And then if it breaks, then I need more data to see whether the break is sustained or not. And so that's the idea behind gold here. While it's in balance, it's extremely difficult to find good trading locations unless you're like stalking it, or maybe you've got alerts going. But because we're at all-time highs, anything that's kind of distributing at all-time highs has a probability of actually going into redistribution. If this was a normal market and we were away from the all-time highs, I would be saying, well, we've consolidated, because that's what distribution is. It's sideways movement. There is a very good chance to go into that liquidation. This is like kind of basic Wyckoff thing, but even supply and demand traders, they also have this in mind, where they're basically looking for a rally base drop. So you go up, then you consolidate, and then you drop off away from that level. But for now, it's kind of no man's land, right? We're like in the middle. The lows are lower down, highs, all-time highs are all the way up. And I'm just like, meh, I'm not really that keen to get involved in that. So this is why gold today, at the very least, is not really going to be on my radar. I think crude oil looks much cleaner. I think because of the huge drop-off that we've had, there's going to be a lot of market makers that are going to try and hedge that move, and that could open up the potential for the recovery upside. So I'm bullish on crude oil, bizarrely, even though it might seem counterintuitive. But when we overshoot all of the reference areas, and when it smashes through everything, it happens too quickly, right? Fast and furious moves very rarely lead to very nice extended sort of trending days. It either means more drama and very violently range bound, or it means we might have a potential for some recovery back to some more sensible areas. I have a weekly demand level lower down when I look at the continuous chart around 65. So that would be kind of a ballpark downside target. But just looking at today's movement, right? So looking at today's movement. So I have a loose area of average session range low for London around 67.66. So that's on my chart. But further down, I actually do have 66.60 to the downside, right? So it's, it's a pretty big, big range, which is nice to see because we've been stuck in no man's land forever. And right now, let's have a look at the 4-hour chart, and then we're going to move on to the profile. Right now, it is trying to create a rally base rally. It's popping above the overnight VWAP, so we're going granularly now into the day time frame. There is quite an obvious balance that happened before the jump off a cliff, and that starts from about 69. So that matches the distribution curve, the value area from London, and at least the edge of London value. So that's kind of my orientation point to see if we can go into a sustained auction, into some type of a gap fill. Now, if we look at the NYMEX value, that is actually pretty wide, obviously, and right now not very useful, but the value high is kind of sitting around that 69 area as well. And if we start popping outside of it, that's going to mean the same sort of hypo, just kind of flipped a little bit. So yeah, crude oil, might be finally back from the dead. Somebody poked it with a stick. It showed signs of life, and now we're going to see if we can get back to trading it. But I am happy that we've had almost a whole week. I mean, wow, almost a whole week of over 200 ticks movement, and it's been pretty consistent, especially Wednesday, Thursday, Friday, with both London and NYMEX bringing a lot of movement. That's what we want to see, right? I'm gonna wait for the 30-minute chart to exit the initial balance for my setup, because right now we tried to go higher, didn't do anything, and we're stuck in a 44 tick range. So I want to see a little bit more commitment before I go into a trade. So if you want to see what the initial balance looked like, just gonna pop a rectangle there. Okay, here it is. So this is the reference initial balance. These two candles, right? So you can go devil is in the detail with profile, you can see that this third candle tried to pop out, but it like created a couple of ticks or one tick above the initial bounce and then went back inside. So right now this is just a range, but we are above overnight VWAP, so they're trying. They're definitely trying. We just need somebody with slightly bigger pockets to maybe step in and make a bit of movement. Let me see what the time in sales is saying. But I wouldn't really expect anything just yet. These are mostly smaller traders here that I'm seeing. Somebody with 10 lots is selling. But yeah, I mean, I don't really see anyone with any bigger pockets. This is all just retail traders. So yeah, we're going to sit and wait. And if we can find a setup, we find a setup. But it's Monday. I don't like to rush on Mondays because, you don't want to dig a massive hole before the day even begins. So we want to make sure that we're not doing stupid things first thing in the morning, right? All right, let's see if we've got any questions. So, hey Dee, can you stalk GC? I did already. Like I said, I don't really like the look of it today. So we'll see if somebody shakes out some GC movement. Josh, I wouldn't put too much stock into the RSI on crude oil. Crude oil is, it is a speculative instrument, but it is mainly used by hedgers, commercial hedgers, right? They have some very different views on what they want to do with crude oil. Crude oil is a physical commodity. It is not, some equity index that is cash settled and that, everybody uses it just for speculative purposes. There is a big macro fundamental component to crude oil. And just because RSI is low and, oversold, it means, F all, as we like to say in London. So, the amount of times that people have tried to long off the RSIs being oversold and got smacked in the face is pretty epic, So, yeah, I don't really like to use those sort of lagging indicators for my decisions. If it matches something that I already see using some more real-time tools that relate to order flow, auction theory, option expiries and things like that, I will definitely take note. But I say that there's a potential for recovery. However, they're struggling, right? This is what I'm seeing on the price action right now. So just because RSI is oversold, it doesn't mean that we won't go lower. This is why I've got some targets to the downside as well to the upside. Would I like to see my primary hypo of recovery going into a gap fill, then subsequently into a value acceptance? Yeah, of course, that is what I would like to see. But nobody cares what you want to see as an individual trader. It matters whether the people with very deep pockets are doing the same thing, right? So we need to look for evidence of them doing the same thing. Right now, not really seeing too much commitment buying. So this is why we need a second hypo. So the second hypo would be that we extend lower, and then we start moving towards the areas that might be magnetic. So that would be average session range low. It might be, it might be the low that we had last week, which would be down at 67.17 and lower. And if it does get all the way down there, well, if we've been there for the first time, second time around, it usually tries to take out that move and then goes to the round number. That's just how crude oil likes to move. And then even further than that, we've got some weekly demands from a continuous chart that are not visible on the current contract. So we're going to, wait for more information to come in. But yeah, I've got targets and sort of entry and interest zones of interest on both sides. I always do that. I never allow myself to step into the market with too much bias because that's never really worked for me well. So trading with a bias where you're like, oh, I want to be long crude oil. That's great, right? But if you are not flexible in your bias, it's going to work against you, because the short comes and you're like, whoa, I'm just going to long this now. It's like, no, you need to be open to the possibility that this could go either way. And, we have the probabilities of, large sell-off, potential recovery, but then it doesn't have to mean anything. The recovery could be short-lived, and then they just decide to keep selling because there's still oversupply. There's still, things that they're looking at from the point of view that there's too much supply in crude oil and we need to go lower, right? We look for the area of demand. But yeah, RSI can be supportive in that way, where you're like, okay, well, I'm seeing a sustained auction up, right? Okay, we're above VWAP, sustained auction higher, gap fill, RSI also showing me, 36 oversold. Excellent, let's do it, right? But I would actually like to see RSI more down to 20, right, for crude oil, because, it's crude oil, so it's a bit crazy. Right, let me have a look at what's going on. Can you clarify London session trading times, time of day information? Of course I can, Juan. So London opens at 8 a.m. my time, which is 2 a.m. Central. Just trying to get my time zones wrong in the morning. So 2 a.m. Central, 3 a.m. Eastern. Now, I like to cut off my London calculations for value areas and session ranges relating to just to the London session whenever the next session opens. And for crude oil, it would be NYMEX, which opens at 2 p.m. my time, which is 9 a.m. Eastern, 8 a.m. Central. So when that comes, I cut off the calculations. And if you have our lovely Blatek indicators, you can easily do that. It's very, very optimizable. And actually, I think for the equities, we actually put in the default of the cash session to just cut it off. So you would need to change those manually if you are on the futures platforms that we utilize for our tools. So yeah, it's to do with what sort of participants do we have in the market. So London has very particular players. And then you have NYMEX guys who have, yet again, some other ideas. We have Canada, one of the larger exporters of crude oil in the world. So, we have, a whole bunch of stuff that happens during NYMEX that has nothing to do with the London guys, right? In fact, London, probably best if you maybe focus on Brent crude. That's like Scottish crude oil, which is, to me, not as liquid. And I have tried trading it before, but somehow I always gravitated back to the WTI contract. So that's the idea, that you only use the relevant hours for the session that you're looking at, and then you reference the average ranges for that particular time period. You reference the distribution curve for that time period, and you don't kind of mix and match. So hopefully that makes sense. What is my opinion on NQ right now? I have no opinion. I have an opinion on ES that might aid the NQ decisions for some people, but let's go to ES. So ES for me is also a potential for recovery, because again, all those moves that we saw last week probably result of NVIDIA or something, and I think it was a bit of exaggerated. I do have some demands lower down towards sort of 53.64 area, and then further down at 53.60, and then really not much until 51.90, right? So, but because of the huge sell-off that you can see on the weekly chart, let's go to the weekly. I mean, look at this. This was a supply at all-time high, and some people just deciding that this is as far as we're going to go. But the demand for, I call it the offspring demands because there's another one that this huge pop is coming in from. It's around 53.66. However, 5400s did cause a late spike on Friday. It wasn't a huge spike. But it was significant enough to kind of go, okay, well, they stopped there. Why? And this was what I was talking about. So very, very late, just a tiny short squeeze. And that means the 5400s, for some reason, were very interesting. Now, sometimes you can have some option strikes that are there, and they're just effectively putting stops to any further movement for that particular time of day. And those sort of moves especially are important into the end of the electronic trading, right? These days, especially in the last sort of 3-4 years since COVID, the zero-dated options have, so zero DTEs have been bringing a lot more movement and a lot more, they've been having a lot more impact on equities in particular, but I've also seen a bit of a knock-on effect in crude oil and gold, because they also have those. Not zero DTEs, but they do have weekly options. And, option expiries is something that I've always looked at crude oil for failed auctions during NYMEX session. And I would find, I don't like telling people about this because it is an extraordinarily complex data. And if I start telling people, they'll be like, oh God, my head hurts. So I try to stick away from some of the more granular stuff that I might be looking at. But yeah, there's potential for recovery in equities this week for sure. Obviously, we got PPI, CPI Wednesday and Thursday. How much movement we're going to get today, I don't know, but it's probably going to be fairly technical because there's not much else to push things along. I don't even think we've got any Fed speakers, which might help. But they can pop out at any time. Like before, back in the day, those Fed speakers, especially if they're voting members, they had to have like a scheduled appearance. Now they just seem to pop out of nowhere. It's like, oh, hello, I'm going to do some talking because, I want to make your life extraordinarily difficult. So that's the aspect that I don't like about equities in general. But I suppose we get that in crude oil. You get some delegate just popping their heads out and oh yeah, by the way, Libya's starting production again. It's like, who said that? Who the F are you? So there's always that in the market, and we just have to kind of deal with it. But yeah, equities, potential for recovery, keep a pulse on some of those reversal areas that I was mentioning in my YouTube. Actually, let me just kind of give you a few pointers on ES. So 5450 was actually an area that I was looking for a further downside. So let me just go back to ES here. Put down the coffee, go back to ES chart. So one of the reasons why is because we have the value high from the previous day's trading, which was Friday. So 5460 was really the area. If we get some sellers here, there could be a sell in equities, but if they don't turn up, then I wouldn't do anything right now. I would be looking for more sell, maybe to the bottom of this this volume profile balance zone to like around 5413, and then maybe see if there are some further longs there. But shorts, if they don't appear here, we're gonna have probably some space to go. I don't really see much, if I'm gonna be honest, I don't really see much up until like 5520, 5530. Yeah, and if we start the recovery, we're talking equities, right? They can go all the way up to sort of 5600s. I wouldn't be surprised to see them back up there. And that directional read, so if we are at the level of 5450, 5460, I want to be a seller if I can. So if I get the evidence of sellers stepping in, breakdown failure of this overnight recovery, that's something that you might use as a guide for NQ. So you're effectively just looking at ES levels and then going, okay, ES is at a critical area. Let's see if NQ follows. And then you effectively use ES levels to express your view in NQ. But this works on days when they are going sideways. So, sorry, when they're going side by side, not sideways, when they're going side by side. So I'm just going to check whether they're similar. Yeah, I mean, they're copycats of each other right now when you look at the price action. So failure of the further upside move and holding the area of 186.22 to me would be an intraday opportunity for maybe some shorts. If we go higher, leave it alone. I don't have any other levels here, so I would need to see a pullback to some sort of a demand area and all of that good stuff. But let's go back to my crude oil now, so I want to focus on that. Okay. Let's have a look at some more questions. Dave's Pirate Life. Hello, Dave. Very good to see you here. Would you be so kind to talk a bit about using overnight VWAP versus London session VWAP? Well, I don't like using the London session VWAP because there's not enough data, right? We've just opened. And in order for a level to be valid, you can't have it like, especially if it's a lagging indicator, you can't have it just printing from the open. You need to be away from it, and that's going to take time. So really, London session VWAP probably won't be very relevant until you get for like 3-4 hours. So maybe it might be relevant in the overlap part of the day, but it's not going to be relevant for now. So therefore, I use the overnight VWAP that has a number of hours to decide whether we're actually far enough away from it or not. Right now, I would say no. This is very, very, very flat on crude oil. So we're fairly close to the overnight VWAP. It's kind of wagging around it, doing absolutely nothing. And this is another reason why I'm sitting on my hands here. If we kind of move away from it sufficiently, I will deem that there's maybe a mean reversion opportunity with that recovery, and then I want to see a level that I was looking at as my reversal zone. So right now, me kind of trying to get chopped up in this area or chasing into an overnight demand, it's not something I like doing. So I want to give it time to develop. Remember, it's Monday. Everybody's just woken up. They've got to their desks. They're, probably still hungover from the weekend. This is like traders and bankers we're talking about. So we're going to see what they do throughout the next sort of couple of hours. But this is the reason why I don't like rushing into things. Especially when I see that the price is close to VWAP. So really the best setups that I've seen, at least for me, the ones that have worked really well, is when we're either already trending, so you have a clear trend, you're below VWAP, overnight VWAP, and the EMAs, the 3 EMAs that I have here, or even just one EMA, whatever suits your fancy. But generally, it's just a very basic gauge of direction. And then whether you're going to go along with the momentum or against it is a matter of what sort of setup I have, in my case, on the TPO profile. Right now, there's a possibility for a neutral day type. So I don't really want to get involved in a neutral day type breakouts because they are statistically not very good. So therefore, I'm still thinking possibly a mean reversion upside from somewhere lower down once we've unglued ourselves from overnight VWAP. So it's a basic gauge of whether we have enough movement already and whether we can do either a mean reversion or go into a trending move depending on what the profile is doing. Right now it's doing nothing. And that's kind of how I do the very basic directional read. Are we flat or are we moving? That's the first step. And then the second step is there a level here? Do I want to be a buyer or a seller. Whenever I start flipping and flopping between, it's a failed auction long. No, it's a breakout sustained action short. No, actually it's long. That's usually a bad sign. So if I flip flop 3 times, I go, that's my trigger. Stop and wait. What did I read wrong here? And then I usually go up to the 30-minute chart, 4-hour chart, and I see what the sentiment is there. And at that point, I just breathe and I wait, because if there is an obvious setup, the market will show it to me. And then if I miss it, I miss it. No big deal. Like Eddie Horn likes to say, another bus will be coming along pretty soon. I mean, we seem to have a decent amount of movement now in crude oil. So I got a little bit scarred earlier in the year because there was no movement. We would be like, 100 ticks during the initial balance and then nothing. I've spoken about this before. And then I would enter a trade and I'm like, checking my internet, and I'm like, is this on? Like, is it on? And I'm like, I can't believe it. It looks like complete out of hours movement, and we're like dead in the middle of NYMEX. So I was like, okay. And I've only seen that happen like a couple of times in the last almost 12 years of trading it day for day. Strange enough, like I said, it was another election year when I experienced that. So yeah, maybe some statistical relevance of a very, low sample size. Okay, let's see. Yarden says, I have a question. When I'm trading micros, should I look at the time and sales and DOM of the micros or the mini? I always have the feeling that micros doesn't represent the price action accurately. You have the right feeling, I will say that. So every time I'm trading micros, and this is a new XFA, so I did end up 1.2k up on Friday. That was all through micros, but I was watching the time and sales and referencing order flow and bookmap on the actual full contract. You're 100% correct. The micros time and sales is, it's there, but really the big movement, so micro is a derivative of a derivative. So, crude oil futures, already a derivative of the underlying commodity. And then you have micros that are then derived yet again from crude oil. And when they first kicked off micros, I felt that they were not liquid enough. So I actually stayed away from them for a good couple of years. But they have enough movement now. They've hired some market makers to pretty closely replicate what's going on in the main market. But I would still reference the order flow tools from the big boy, right? So if you're looking at order flow on crude oil, making decisions on micros, that's absolutely fine. I would say, though, if you're a price action trader, probably no need for that, because you're not looking at real-time order flow. You're looking at larger levels that are already based on the big contract, and there's going to be very, very little differences between them. But still, definitely on order flow, time and sales, bookmap, I will always have the full contract open. So yeah, good feeling, Yarden. 1LE Cam says, what is the volume profile fixed range used for? It is used for, to figure out areas of balance and imbalance. So very, in like the simplest terms. Which area had a lot of volume in it, which area didn't have a lot of volume in it. And each of those carries a particular implication, if you will. So, for example, thinner areas, we expect the market to move fast through them. Whether up or down, that's now up for debate and the contextual nature of whatever we're looking at. But for example, if I'm looking at the daily chart here, this is a larger profile. You can see that there's a balance from 72.30 and then all the way up to about, I would say up to about 80.17, right? So that's the distribution curve. You can even call it a value area. This is what we mean when we say value area. It's a distribution curve on that particular time frame, and this is a very large time frame, you can also have distribution curves granular by sessions. That's what I look at. And then you can start to get a little bit of a better idea of where the interest was and how to approach that. So for example, if we start to go higher and we start to pop into the area of distribution with quite some strength and momentum, you will then be looking for the prices to accept that distribution area and to go deeper into them. How deep into them, again, up for debate, and you can also see whether you have some opposing areas that could be problematic. All of my my analysis of this sort is actually based on either volume profile and or supply and demand areas. I will turn to supply and demand areas if we have a lot of volume inside an area and I can't see clearly where the market makers maybe stuttered a little bit, and that's where price action patterns for me, I mean, not necessarily patterns, but just looking at what sort of a formation the supply and demands had. So I can see that this was more of a staircase formation. So rather than having a clean move down away from this originating point, which is at 77.45, so we popped into that. That one was actually a very clean move away. But then on the first test of that zone, it was just very staggered, right? So it's like kind of like a drunk person coming out of a pub. Oh, boom, there's something. Oh, we tripped. Oh, let's go back up. Oh, we tripped again. Oh, no. So a little bit haphazardly going down. And then once they made a decision, they're like, okay, we've reached the cliff. Let's jump over it. And now I'm seeing that would be a kind of a single print that was left behind, and you can also see that on the volume profile, not a lot of volume there. So that's what creates the single prints, very quick movement away from certain levels that comprise an irregular structure, right? And at some point, we don't know when, but at some point those irregular structures do get repaired. Sometimes in case of equities, they stay for years, never being touched, and then COVID comes, black swan event, and they get filled like in the blink of an eye. But on crude oil, you can have a lot more up and down movement. It's not such a single direction product. It will revisit those zones fairly quickly, and that's one of the reasons why I like it. So hopefully that clarifies things a little bit more, but it's all very logical. I know that it looks like really scary and you're like, oh my god, what is this? But it's just logic, right? Most volume traded represents distribution curve, aka balance, right? We start to accept into that balance, you expect the market to rotate. So when we say rotation, expecting rotation, that's what we mean. We look for an area of balance and the price to effectively go through it to the other side. Now, what happens up in the low volume areas and supplies that were there before, again, up to context. But typically, if it's the first test of those low volume areas, supplies and demands, you expect some sort of a reaction in the same sort of direction. So we hit them from the, let's say you have a supply there, low volume zone, we hit it, you expect a reversal. Now, whether that holds or not, again, up for debate and contextual nature of the market. But that's the idea, right? First test of the zone, always the strongest and most probable to give yet another reversal. And the more times we visit that, the less and less orders are there, and therefore we can open up the move for the single print fade or for value acceptance. So it's a similar outlook, except one looks at the very thick areas that might take forever to rotate through, and the other one looks at areas that are visited very quickly, and then the price kind of just touches in and moves away, or just kind of starts to move through them. Actually, single print fades are momentum trades. So once it starts to take out those areas of low volume, you can expect a very, very fast movement. Whereas when you have a very thick area, that tends to add time because there's a lot of volume to battle through. But on the intraday level, you can have areas of value that were made with low volume. So that usually happens on news event days. And that's when you can have quick value acceptances. Again, going very granularly into the auction theory. Right, we have a slightly larger player here doing 50 contracts. This would be someone that I would deem either a user, maybe a user of crude oil, that needs to or wants to hedge. I mean, we can't know for sure, but this would be some kind of a hedging activity for me. So they are long. They're long, okay. If I manage to get a bullish engulfing of some sort here, this could be the start of an upside move. So I am going to put in a very small amount here. So I'm going to put 5 micros just to test the hypothesis. And I am going to move to the micro here on this chart. And I'm only going to use 35 ticks there. 34 ticks, 170 risk. So this is conducive to what I want to see, right? We're still at VWAP, so not great. This is why I'm just front running this with a tiny order. So if I lose 170, I don't care. And if we start to move, I can add another 5 to make up equivalent of 1 mini, right? And then we can see how far we get to. Now, my first area of resistance was 69. But that might be a little bit much. So what I'm going to do, I'm going to aim for the edge of that inventory's 30-minute candle that we had, which is at 69.70. So that will be my target, some 115 ticks. We also have some, let me just have a look at this. Yeah, so we also have some levels there on the option side that could help this move out. But yeah, we're going to see whether somebody else actually joins up on this move. So I'm going to leave that running. There's a new 30-minute candle, so it's going to take a while until we actually get the move. And then if they continue down, I'm going to take this off and reevaluate a little bit later. So again, not freaking out, but I do want to be a buyer at these levels. So whenever the big boys turn up, I want to try and go along with them, right? All right, so let's have a look at more questions. Brody says, hi, Deeyana, new to your site. Are you a potential buyer of crude oil around 68.10? That's oddly specific. I don't have, like, I have zones of interest, but it's like, oh, am I going to be a buyer at 68.10? Right now, no. I mean, you know, we are holding the Asia low. Is it the Asia low? So, no, Asia low is probably somewhere lower. When did we start this? Yeah, so Asia low is at 68.15. And right now we're creating balance, right? But what tends to happen in London is that once they make up their minds, this initial balance that we have is very, very small comparatively. So I can't really use it for a failed auction. I saw somebody was asking, oh, was this a failed auction? Technically, yes, but you have a 44 tick initial balance. That's not good enough for anything, right? You're going to be nitpicking on like 20 ticks for profits. And then usually the way crude oil moves, it actually moves in candles that are about 20, 40, 50 ticks wide. So whenever I see a super tiny initial balance, I'm not looking to take trades off of that. Only if we have a reasonably sizable range, like let's say we have an initial balance of 70, 80 ticks, and then I'm looking at a failed auction. That increases my profit margin for the trade. But right now, all I'm using is just general price action, general rough eyeballing Tokyo low, and then just expecting them to resolve this one way or the other. But the reason why I'm entering here is because somebody with deeper pockets is interested in buying this at 68.38. Now, a lot of the times, if the users and producers of this particular commodity are looking to hedge their positions, or maybe to buy the actual commodity for whatever they're making. Like, let's say there's an airline company, they use a lot of crude oil. They want to hedge their risk, maybe, but they know that they're going to have, let's say, Christmas period. Christmas period calls for a lot of demand in crude oil because there's going to be a lot of flights. People go to see their loved ones for the holidays, right? So they want to take advantage of a low price today for delivery in, let's say, I don't know, December or something. So they probably wouldn't be using the same contract month for that. But depending on what they already have, they might, they might. But generally, if you are a user or something, you might want to buy the commodity for delivery whenever you're going to need it, right? For the period that you're expecting to need that. So there are like different reasons why people with bigger pockets might want to get involved in futures markets, but it's almost always some sort of hedging activity from producers and users of it. So, some understanding about why people do what they do with crude oil does help. But again, you shouldn't go too deep into it, because at the end of the day, we're intraday, we're speculators, we're technical. We are all technicians here. And that macro side can sometimes just give a little bit of a helping hand to figure out what's going on, so that you're not totally confused over crude oil movement. But that doesn't mean that it's going to be foolproof, right? It doesn't mean that I'm 100% correct here. Nothing is 100%. And this is why we have to be very, very mindful with risk. That's why risk management has to come first. So that whole idea, are you a buyer at X price? I always say wait and see. So if I have a level, I will go there. And I do have some levels around this entire area of sort of Tokyo balance. And I do want to see a recovery. So I want to be a buyer, but where? That's up for debate. It could be 68.50, it could be 68, it could be the fact that I changed my bias, and I could go, well, that didn't hold, so now I have some other players coming into the market, and we have a move down, so I'm not going to go against that. So my bias remains flexible, but for the time being, just off the back of seeing somebody buying here, and the fact that I want to see the recovery after a huge jump off a cliff, I think we have a fairly decent chance of reaching 69.70. Whether this entry is low enough or not, I mean, ideally I would want to be a buyer. If we're just looking purely for technicals, I would like to be a buyer around 67.50, and then all the way down to this Friday's low, right? That would be a better trade location, but I don't have that right now, and I have the London session stream to get through. And, people accuse me of talking too much and not doing enough trading. Well, that's because I'm very selective with the type of trades that I want to take. It is tradertainment, but at the same time, we want to keep it a little bit sensible. So if I get this area, so 67.50, that will be like the most ideal area for me for longs. But we may not get that, so that's why I'm doing a test or feeler trade. Now, feeler trades for me are very, very low, low risk, as in like monetary value, where I'm testing what the market is doing, right? I'm not necessarily like, oh yeah, we're definitely going to have profits. I just want to see how the price reacts in relation to my entry, because when you're in a position, you're a lot more aware of the movement. And right now, not doing well. It's going into minus 22 ticks. So I'm going to leave it to play out. But right now, those guys that bought, they're not having much of an effect. Nobody else is plowing in with them. And there's a lot of short-term players. But at the same time, we have a Tokyo low at 68.13 that is still keeping some interest around those levels. So again, letting it play out for very small amounts of money, and just keeping a pulse on that price action. So the way I look at the feeler trades is that you pay some money for information. Whenever you're just looking at a chart without actually being in there, you don't necessarily have a sense of movement as much as you do when you are in a position. So when you are in a position, your focus suddenly narrows and you're like, how is this doing? Because I don't know, something happens in your brain that changes your awareness to price. And that's why I like to be in smaller trades, just to feel things out. And then if I have some movement in the same direction, and if I have a 30-minute chart that gives me bullish engulfing or something, I can then add to that, because that would have been my primary entry if I had not done a feeler trade. But if a feeler trade loses, that's fine. It's expense in order to get more information out of the movement of the market with quite some focus, if that makes sense. I don't know whether I would advise people to do feeler trades if they're newer traders, because maybe their hypotheses are a little bit still tricky, and their analysis might not be spot on. Their levels, you might have flawed levels that you still haven't worked out. Maybe you only use one level. You will see that I use several, and I also use options data to kind of see whether we can get some interesting magnetic areas that might give us more pull. So whenever I'm looking at those, I have a reasonable amount of confidence in what I want to see, right? But if you're just doing feeler trades just to feel the movement, maybe not the best idea. Right, so we had some big boys selling here, interestingly. However, price went up, so they were absorbed. So a lot of sellers, price went up. Sellers, absorption, right? That's what it means. See a lot of selling, price goes up. That means sellers were absorbed. Alex says, do you use anchored VWAP for the USA sessions? I still stick to overnight VWAP unless we have a very big auction that moved away from the initial balance. Then I might use anchored VWAP to the session open, to the actual New York session, as a target. So effectively a mean reversion up or down to VWAP is when I would resort to an anchored VWAP. Aside from that, no. VWAP is not something that I use that much in my decision making. I use it more often as a target than anything else. But sometimes you have these moves, if you're looking for a gap fill, you can have the movement through VWAP that then brings a momentum trade, like a breakout trade. But those don't happen very often for me, especially not on crude oil. So when you see that, there's a chance to use that VWAP as a springboard rather than as a target. But for me, it's always worked better as a target, unless we have a gap fill. So it's a different sort of thing. Avinash says, why is trading a thing? Okay, let's see what else he says. If I place 100 lots of crude by order, does it actually move the market? How do countries actually buy crude? Where do they buy it from? Do they buy it from NYMEX? Okay, you sound like a beginner, right? So I'm not going to be going into why is trading a thing. But I will say that trading, the markets, started off with producers and or users, like I was saying just a minute ago, of those commodities, which were actually agricultural at first, wheat, corn. Why? To hedge their risk. To hedge the risk. Let's say that a corn producer has, a bunch of corn that they've produced, but it's not the harvest month yet. So now he has an oversupply of corn where he's going to incur insurance costs, storage costs, a whole bunch of other stuff. So to hedge their risk, they might want to offset the risk of insurance costs and storage costs in the market. So therefore, they will sell the amount of bushels that they have in the market to offset that risk. That's why the markets exist. Now, we've obviously moved way past that because now we have electronic markets and everything is transacted through centralized exchanges. Back in the day, you didn't have centralized exchanges. You had the market, physical market, like I don't know whether that's a thing anymore, but you have markets in London where they sell apples, they sell pork pies, they sell, a whole bunch of producers of something going to market to sell their goods. This is the same thing, right? It's exactly the same thing. So the futures markets were created primarily for the producers and users of commodities to hedge risk. I'm not going to go into that right now, okay? So you get yourself a book or you jump on YouTube and Google why markets exist, what is the role of futures markets, and then go down the rabbit hole of learning about what the futures markets are, okay? It will be very useful. And then, asking questions in a futures day trading stream. Why is trading a thing? Because we bloody love it. That's why. Can you take a look at GC? Carlos, I looked at GC and I decided that it's a no-go because it's very range-bound at the moment and I'm not interested in it until we get a little bit of a shakeout from those levels, right? So very balanced, very balanced. I mentioned it briefly in the beginning of the stream, so you may want to go over that because I looked at it and I went, ew. No, it's effectively doing a distribution. So it's going sideways on a very large time frame. It looks very ugly with buys and sells, buy wicks, sell wicks, buy wicks, sell wicks everywhere. It looks messy, so I don't want it. Dave's Pirate Life. Could you explain rotation factor on TPO? Anyone ever asked? Don't use it. Rotation factor is nothing more than the number of TPOs above and below POC. So if you have the widest point of the profile, what rotation factor does, it effectively just adds up the TPOs that were made below it and how many above it, and then it gives you the rotation factor. I've never found a way to use it. I actually ignore it, but it is on the Blatek indicator if you need it, as you know, Dave, because you're one of the market stalkers. So I never found any use for it. I mean, Dalton talks about it, how, sometimes if you maybe build more in the bottom of the profile, maybe you have a possibility to go higher. It's never proven to me that that is actually applicable in real time. So personally, I don't even look at it. I don't pay attention to it. But I know that people were asking for it when we were building our Blatek MP indicator, so we put it in the panel. But yeah, I just don't, The rotation factor is not a factor to me. Alexander says, Dee, when do you usually exit your DAX positions, before US Open or anything like that, or no time stops? It really depends. Like if I'm sitting on about 34 ticks in DAX and we're already in the overlap, I would probably take it, right? But if I'm in a trade and it's going pretty well and then we're just printing consecutive bars and we're going into that extended trending move that DAX really loves to do, I will actually hold my DAX trades until 3 p.m. London time, 10 a.m. Eastern, 9 a.m. Central. Why? Because around about that time, again, we have some options activity in the Forex markets and a whole bunch of other places that gives a knock-on effect. So you can have failed auctions. Then you also have the Euro close about an hour and a half after that. So all of that puts into the mix a probability that at that point we're going to reverse. So I will kind of time stop it at that point. Sometimes I will look at consecutive bars on Edgeful, right, and see whether we do have, consecutive bars, and then I will time stop it when Edgeful tells me to, or if we get an opposing candle that breaks the cycle of consecutive bars. So again, there are many ways, but generally, if I get like 70 ticks on Crude on DAX, I'm one happy bunny because for me that's about 1.7k. Sometimes I will be in on 2 lots there, so it will be a 3k day. And that's enough for me. I do trade full DAX, so depending on the size of accounts, I will trade either a 1 lot or 2 lots. I think the most that I've traded on DAX was about a 5 lot. I never went too heavy on it because it is a $25 per tick. So pretty expensive. And of course, you can trade mini DAX, right? And there's a micro DAX too. But for me, for that account, it doesn't make sense to trade that because that would be like peanuts. All right, let's have a look at a couple more questions, and then we're going to be finishing up. So Emanike, am I pronouncing that right? Good morning. Can you throw some light on why you decided to start testing your hypothesis with a small trade, even though you hadn't gotten the bullish engulfing candle yet? Thanks. It's called front running a trade idea, and it is based on experience. So I've seen these sort of moves during London with a very small initial balance that shoot up into the overlap, and then I'm not able to catch it properly, right? So I have a hypothesis, I have a level that I'm looking at. And if I were to wait for the entire, like let's say sustained auction and a gap fill to appear, there might be a possibility that I never catch that. And by the time that it rises up massively, I'm then looking at an initial risk of about 70, 80, 100 ticks, okay? Front running a trade based on the statistics and experiential data that you've experienced over the years, pragmatically, it opens up a possibility for the advanced trader to have some money on the open position on the hypothesis that you're trying to run even before the trade fully materializes. And then once it does, you can add more and have effectively an average price that would be much better than if you were just to enter. But the problem with novice traders is that they don't have that experience behind them. So they try to use the gut instinct to add the level, but there's no gut instinct because gut instinct without experience is just nonsense. Right? It's just impulsive behavior. You're just clicking a button. You know, oh, I feel it. You're not psychic. We're not psychic. Nobody is psychic. It doesn't exist. So whenever I'm front running a trade, it will be based on something that I've already observed many times before and around areas that I want to see the particular event happen. Like let's say, very simple, after 10 a.m. Eastern, failed auction on crude oil. Very, very high probability event, but sometimes they just whip out in like literally 105 ticks and it's over. I actually missed one last Wednesday because we were staring at ES. I was very annoyed with myself that I wasn't looking at my main market, you know, and I just totally, and I could see the one of the C periods close back inside the thingy, and I'm like, okay, I need to do that. And then I didn't, and it was over. Some news came in, it went up to like 110 ticks, and I was left without a trade. So I do front run a trade sometimes if I can, in order to be involved in the hypothesis that I already have, right? So this hypothesis that I'm running here is a recovery and an idea that we will go into a gap fill up to at least 69s, right? At least 69s. Whether we then accept value or not, and whether we start going into this all the way up to the inventories range, that is an unknown, right? But what I do know is that we've had trouble going below Tokyo, and there are buyers there, right? We just don't have the momentum yet. So this is where the front running of the idea came from. And I've been doing that for years. It's not like something new, except in times of high volatility. If you were watching my 2021, 2020 live streams that I still have on my own channel, the moves was so quick, so you didn't actually have to wait a lot to actually find out whether you were right or wrong. Crude oil has changed a lot. It is much less volatile these days, even though, you still have very big days. And I think some of the volatility is coming back. I wouldn't say that it's, rocking and rolling, but it's certainly better than it was just a few weeks ago. So may it continue. Fingers crossed, everything crossed, then my main market is back. Okay, let's take another couple of questions. Do you apply Wyckoff on your analysis? Sort of. Yeah, I didn't actually know that was Wyckoff when I was learning about it, but I've always had this idea that when the markets rise up and then distribute, there's a very high chance they go into the sell-off. And the same thing can happen in uptrends, downtrends. It doesn't matter. It's just a cycle that markets go through. And then many years later, I realized that's Wyckoff's theory. So I'm like, oh, makes sense. Accumulation, markup, distribution, liquidation. But I don't call it that. I call it phase 1 and phase 3 for accumulation and distribution, then I call it phase 2 and 4. So in my head, that's much clearer than accumulation, distribution, reaccumulation, redistribution. I was getting confused explaining it to people, so I just renamed it for my own sanity. Cody with an FAQ. What is a failed auction? I've heard you speak of it a few times. This is something that we get every single day. Maybe I should open up the stream with going, failed auction is, and then go into the regular broadcast. So failed auctions are based on the first hour trading range that breaks, but then the price cannot sustain outside of it, and then closes a 30-minute chart back into that first hour trading range, which is called the initial balance. So that is the failed auction. Failed auction has an implication of a rotation all the way back where it came from. So let's say that we tried to go higher, but we failed, close the 30-minute period inside that first hour trading range, and then the implication is that we're going to rotate all the way back down, right? So that is a failed auction. Now, I do think we have some plugs to do as well, so let me just bring this up. It is TopstepTV's first birthday, right? So I can't believe that it's already been 1 year. I mean, I've been here probably from the second week of TopstepTV kickoff. And this week, the team, employees of Topstep, because, you know, we have contractors such as myself and Rips and Dakota, and we have permanent employees such as Dolby, Hogue, everybody who you see as literally hosts, Andre, Jack. They're all away from Wednesday through to Friday because they're having a little company retreat. So we're going to have the Dakota takeover for 3 days. Now, I will be on with Dakota on Thursday from 1 p.m. CT, so from 1 p.m. Central all the way up through to the end of the markets. It's going to be quite fun because obviously we had the Rips takeover a while back, and now Dakota is going to be doing the takeover. He's going to be streaming for like 8 hours a day. So I hope that he's going to get like a ton of sleep and stuff. I know he also struggles with sleep sometimes. Hoping that he can actually do the Olympic version of taking over Topstep. So it's going to be fun, so that's happening Wednesday, Thursday, and Friday, Dakota takeover of TopstepTV. Now, in case you missed it, we had Linda Rashke last week on TopstepTV. So she was absolutely amazing. If you missed her, you absolutely have to watch how somebody who's been at the top of the game with her hedge fund at I think it was 17th spot in the world based on performance, absolutely amazing. Just to see how she analyzes things and what she considers to be important and how she approaches her trading. So we're going to post a link in the chat. Let me just grab that for you to watch that. She's such an awesome lady. I've been a huge fan and follower of her for many, many years. So there we go. I've just popped in a link in there. And then, do you want us to analyze your stats on air? So that is the question. You can have group coaching session. Usually it's with Hogue and or Robert. So if you want your stats analyzed, this is the time. They're going to be around Monday and Tuesday. Obviously, they're going to be away. But if you want your stats analyzed, this is the time to do it. So I'm going to pop that link into the chat as well. Whoops, what the hell is happening there? One day I will learn how to use Google Links. All right, so it's going to be a form, right? There we go. It is the form where you submit your stats. If you want to do that, obviously that your stats will be reviewed for group coaching segment. So just keep that in mind, okay? All right, I think we're done for today. That was the last question. So yeah, let's take it super slow today. Monday, we have Wednesday and Thursday with some larger numbers if you're trading equities and stuff. And obviously, crude oil can move pretty nicely for London on regular times. But we'll see. It started off pretty muted. So we'll see what the day brings. If I don't see anything super obvious and we don't see any movement that actually makes some committed effort to get to some of these pegged areas of interest that I've got, then we're going to have to wait for another day. You know, that's what it's all about. But yeah, I remain interested in further longs around 67.50, and then I remain interested in shorts around 69.70 all the way up to 70 area. If we get all the way up to 71.50 though, I think that would be a pretty decent recovery, and I would expect to see more buying in crude oil. That's like an overall sort of big week to 2 weeks outlook. Thank you for being with me. If you found any value in what I said here today, please click like. If you're not subscribed to the Topstep TV channel just yet, make sure you subscribe. We have a lot of good stuff coming your way. We have the main broadcasts later on today, so check that out. And until then, I will see you tomorrow for another London session, and then obviously another day for the Dakota takeover when I'm going to be joining for all the fun and games. Thank you for being with me. I will see you tomorrow. Enjoy the rest of the broadcast. Take care.